Very, very cool. Let's talk about silver for a minute. David Bateman, he's a billionaire, and he's shown on Twitter, on his Twitter page or his X page, the warehouse full of silver that he took delivery of. Again, removing counterparty risk. And I want people to know that we have 9 vaults around North America, all with Brinks. One of them is a COMEX facility, just one of them, and that's JFK Brinks. And I have a client with over 1 million ounces of 1,000-ounce bars at Brinks JFK. She wanted to store it at Brinks Salt Lake City. And my Royal Canadian Mint distributor, who has them stored at Brinks JFK in the COMEX ecosystem, they're eligible bars, said, no, you don't want to do that. She doesn't want to do it. Well, why? Because if they move to Salt Lake City, then they're no longer in the COMEX ecosystem. Now think of David Bateman's bars in his own warehouse. I said, but that doesn't make sense to me. I said, if they're in the COMEX facility, in a Brinks facility, and they get loaded onto a Brinks truck and get moved to another Brinks facility in Salt Lake City, Utah, wouldn't it still be under the same chain of command? He says, no. Once it leaves COMEX, it's out, and it would have to be reassayed to come back in. So you look at a guy like David Bateman, who's got all of this silver. He doesn't plan on sending it back anytime soon. I think it's interesting when we see, and I use that in terms of all the metal that is being delivered off the exchange. Once it leaves, it is not easy to get it back, and most of it, now his may go back someday, but most of it, I would argue, is not going back, and that's something people should think about as they let this marinate a little bit. But anyways, he just came out and said that if just 10% of the gold investment globally, that demand shifted into silver, it would wipe out all the available annual mine supply. So again, thinking of COMEX delivery patterns or what we see on the LBMA, does this suggest that we are moving closer to that kind of either a structural crunch, a squeeze in silver, or are we seeing silver being remonetized as well, just not backing the system? The U.S. government just changed it, and they changed it from, I'll give the exact terminology, they changed it to a critical mineral, a classification that aligns with other critical minerals like copper and lithium. It's no longer just an industrial. Is something bigger going on with silver in your mind as well, is what I'm getting at?
I think so. I mean, silver is, I think, the only commodity that is still way below its 1980 high. We know that silver is always lagging in precious metal bull markets, and then suddenly shows up dramatically towards the end of such a bull market. So I mean, I'm the first one to admit that I thought we would get a bit more of an impulsive rally in silver in spring, early summer. That was my expectation. I thought we would probably have seen $50 already. But if I may reassess now, I think it's actually good that it takes more time, because it tells us the whole bull market in precious metals has more time to go. And so I appreciate silver rather slowly and little by little creeping higher here, and not like going completely berserk, which we usually always see at the end of a rally in the price action. Of course, we know that silver is being used in many important technological products, and of course, that's also very important for the future in terms of data centers, in terms of AI, in terms of you have this special solid state battery around the corner, etc., etc. I mean, the list is very long, and we know at the same time the supply and demand, see, the silver market is very tight. We know that there is not a lot of new mines coming on at all, if at all. Most of the time, silver is just a byproduct, and then it doesn't really matter in the whole production scheme of a big mining company. But I think everything's on the table. We just have to be patient. We have to be appreciative of these prices below $40. I think once it takes out $50, it can happen rather quickly that we rally towards 75 and then maybe $100. And technically speaking, we have the mother of all cup and handle patterns in the silver market. It's a 50-year pattern there in the making. And on a linear chart, we're talking $100 price target. On a logarithmic chart, we're talking $500, $600, $700 price targets for silver. And if we look at the gold-silver ratio, you can also definitely make the case for three-digit silver down the road. So I appreciate that it takes more time, because that gives us also more time to still buy more. And I silver is still very undervalued here, and the whole mix that is kind of like cooking here, all the ingredients that you just mentioned, it's just a question of time. And again, I appreciate that it's a little bit slower than maybe people wishing for, to be honest.
You know, one of the things that I appreciate about you is your open-mindedness, and you've exhibited that already. And maybe that has something to do with being creative with, like, with music. You aren't just robotic in your analyzing of things. You have more of a creative mind and open mind. One of the reasons I say that is that I know that you, I don't know to what degree, but I know that we've already talked about rehypothecation and the manipulation. And some, like myself, would argue that this is part of the reason that metals like silver underperform, even despite strong fundamentals. So, you know, assuming that manipulation really does exist, and I think you believe it does, the Western central banks have done a great job at holding down the price. And I have reasons why I believe they are. We won't get into that. People following me enough know exactly why I believe the metals, both silver and gold, for different reasons, have been suppressed. But let's just give as a given. Do you see a point where these possible manipulations could backfire? For example, too many players stand for delivery on COMEX, or if central banks continue draining Western vaults, what could the consequences be? And I will paraphrase or highlight the LBMA, which, you know, is a T+1 settlement. T is trade day, +1 is settlement. On the third day, the bar should be moving. Good portion of this year, they said, shortage of manpower and trucks at the Bank of England. It's now T+8 weeks. Do you see a possible moment where there are some serious consequences for these players, these naked short positions? What would that look like, and what do you think the likelihood of that happening actually is?
I don't know if there are any consequences. I mean, so many people nowadays get away with stuff. It's unbelievable. I mean, we don't open that box. But I think what you just mentioned is always the case. They change the rules, right? I mean, that's in the end of the day always the end game. And it's the classic also monopoly rule. The bank always wins. And if it doesn't win, they print more money so that it can continue playing. So they will change the rules and print more money, print more fiat, to be precise here. I think that's what's going on, and most people accept it, and most participants are actually not in the position to go against it. I mean, it would take years of trials, and you know how those cases usually end. So I think it's just a higher price and more fiat money printing. That's in the end of the day the result of it. Even though I
And
would
less
like to
naked
see
shorting, maybe? Real price discovery, maybe?
yeah, I mean, I think we are already seeing real price discovery. I mean, if you look at the price action nowadays and compare this to what we've seen even in the first bull market, 2001 to 2011, you don't see these waterfall kind of like sell-offs and then multi-months kind of like gold not doing anything. It's always coming back very quickly. It's very resilient. Even though you see those $100 sell-offs, it takes a few days or maybe at maximum 1 to 3 weeks, and gold is back up at the highs.
That's
So it's not working anymore, right? So I think the structure has changed. I think the price action has changed. But still, I mean, there are classic kind of cases like option expiry of a month at COMEX. It's like they're trying to down in a favorable position so that most of the options expire worthless, right? I mean, that's the classic kind of scheme.
rinse,
It's
wash,
still
and
kind of
repeat.
like, yeah, every second or third month, it kind of like still works, but it's a short-term phenomenon. I remember in the first bull market 2001 to 2011 in which I participated. I mean, there were like 1.5, 2 year kind of like breaks in between where gold went nowhere, and it got beaten down every Friday afternoon in Germany when the New York COMEX opened up to trading, etc. So I mean, we don't see that anymore. Even during the US session, usually gold is actually moving higher and not lower. So I think the market has changed, and you can see exactly those points that you made. You see it in the price action. So it just unfolds maybe slower than we all expect. I mean, usually gold bugs believe somehow in the end of the world, in the everything has to end up. But it's probably just the famous classic story of the frog in the hot water. So it just slowly but surely,
Or little
temperatures
by
will
little.
yeah.
It's funny. I remember there was a guy named Dmitry Speck, and Dmitry used to publish charts.
Exactly.
Yeah, and he did a one graph of 10 years worth of data back then during that market, and he would show the AM fix and the PM fix into New York, and like 52 out of 58 Sunday nights when the market would open in Asia, straight down. And you're right, we don't see that anymore, and the resiliency is incredible. Actually, you're right, and the corrections can still be sharp, but much more abbreviated. I like your take on that, and while you still acknowledge that there is suppression and manipulation, perhaps the physical demand at that level is shortening the duration by which we see that. I'm good with that.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.